Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Monday, the 9th day of August, and this is the daily report. Forex Gold currently trading under pressure just below $1,200 at $11.9955. It is trading off about $5 to $6 on the day. You know, traders, this has been really the first round of any kind of profit taking we've seen in this entire B wave, this impulse wave up right in here. The interesting thing is the candlestick pattern that it is forming right now is a dark cloud cover. A dark cloud cover is after an extended uptrend. The market opens at the close, has to in the Forex markets, and then closes at or below the midpoint, which it's just right about there. However, without confirmation, this is not a pattern that we act on. Now, confirmation of this would be a confirming candle on the following day, where you would get a black candle that would make a lower low and a lower high. We're not seeing that right now. My personal sentiment is that the market traders right now in these quiet summer months are simply looking to see if there's any stops below 1200 and basically test the fortitude to see if this critical area of 1200 is going to hold. The one thing that I do think is worth us paying some attention to is the fact when we look at our Fibonacci retracement, this is at 23% level right in here, that we talked about it yesterday. Again, you notice we're coming up, we're trying to take out these highs right in here. However, each time it does come close to this area, we do have sellers come into the market. When they do come into the market, what we're seeing is the market moving back down. I think that it's important. We're currently trading over $1,200, but I think that it's important, at least on a closing basis, that we maintain that. If we do not, traders, I would look for really the second part of this B wave. A typical B wave is going to be what we call a 3 count, meaning up, a small retracement, and then our final move up. Now, as far as our particular trade is concerned, of course, we're in at 1179, 1180. We do have our stop trailed up to 1190, 1190 on a protective stop. So I believe what's going to be critical is if we do believe that there could be some downside activity, meaning if we get some sort of a confirmation of this dark cloud cover here, and we believe that it in fact is going to have a 3 count, and that 3 count might begin in this area, it might be prudent for us to take our stops to the market, have the market come back down, have that retracement take place, and we can either A, reposition ourselves back to the long side for this final leg up, or we can simply wait to see how it reacts in this area and look to see if it might not be prudent to wait for that corrective C wave down and initiate a short position within the market. Now, as long as the market can trade and remain above $1,200, and as you can see, we are currently active in trading and we are back above that point right now, my sentiment is that our best action is to maintain our stop and to maintain our long position. Should we see a reason to change that, meaning if we do get a further sell-off, I think we need to react accordingly. The big fundamental news, of course, is going to be a Federal Reserve meeting that's going to take place shortly this week. And I think that that's really what traders are waiting for in terms of some sort of indication where they think this market might move in the next week. In terms of other technical indicators that I do want to take a look at now that we are currently trading within a defined range, first our stochastic oscillator, we do have that moving up nicely to the upside. Our percent K, which is the faster of the two, percent D being the slower, negative 14.56, percent D below it at negative 26.49. The MACD, moving average convergence divergence, is showing us a very, very similar scenario. Also, these two lines are moving apart, and we do have our fast MACD line at negative 3.85, the slower at a negative 7. And the last technical indicator I want to look at this morning is our simple moving averages. This longer blue is a very, very long-term simple moving average set at 89 and then 23 on this black one. I do want you to realize that we are in fact at this point trading above both of these moving averages, and that also is indicative of a bullish market. I think that gold is beginning to find definitive ceilings and floors, in other words, support and resistance levels. And what we're going to have to watch very, very closely over the next couple of days is if it cannot take out this 1212. And as we've talked about, it's flirted on a couple of occasions, again, attempting to flirt here. The first thing, obviously, we need to see is the market begin to, on a closing basis, close above 1200. That being said, if in fact we see that, we need to see how it reacts in the range of that 1212, because if the market cannot take out that resistance, my sentiment is it has nowhere to go but look to find where it finds support. So that will determine whether we get really a short lull in this area, or in fact whether or not the market wants to trade in that 3 pattern on a B wave, as we talked about just a few moments ago. We'll have to see what this week brings. It's still early within the trading week, only Monday here. So I think we're going to have an interesting week, to say the least. This has been Gary Wagner with WFGForex.com. As always, wishing you good trading, and we'll talk to you on Tuesday. Bye-bye.